Well, good afternoon, Brian. How you doing?
Doing great, Ray. Doing great.
Well, today, as we are moving forward into 2025, I like to explain to people the opportunities in front of them as they go into a new year. I
Okay.
think all people want to leverage what they have, either from a savings or abundance that they have that they want to make additional funds on, or to be able to um, grow their livelihood for the next phase of their life. And I think what you have shared with me is that there's a way to do that in a very passive way. And I
Yeah.
want to introduce that to everybody today as they come and listen to what we're doing, how we're doing it. And there are certain things that they probably need to know, like who we are, some of our
Yeah.
background, and then also um, what are we talking about? So we talk about passive income. It means a lot of things to a lot of people. If you have a rental property, there's passive income. Not as much,
Right.
but there's passive income.
Right.
And you have other vehicles out there. CDs is passive income, but it doesn't
Right.
pay you a lot. So
Right.
part, so when we look at this, how do we um, show them something different that they can actually build up over time and receive additional returns on their monies without them working it? It's just a matter
Right.
of adding to it, let it accumulate. Uh, so who I am, my name is Ray Rutia. I've been in the financial consulting arena for the last probably 20, 30 years, differently, sometimes in real estate, sometimes in tier one trading. Uh, had 70 properties at one time that we garnered back in 2004, five, and six. So we had rental properties, we had fix ups, been in the non-performing notes business in the real estate. And as you fast forward in time, the vehicles have changed. Uh, it's not so much anymore of doing a fix and flip because it takes a large amount of capital. If anybody's ever done it for the first time or attempting to do it, you could take a couple $100,000 by the time you're all said and done, and you may make 20% of that, maybe 10%, depending on the model where you're at and so forth, so on. If you look at rental property, you really don't make money till your fifth year. From the starts, when you start paying down the principal, the bills, and things of that nature. So
Hmm.
I've been involved in that. And Brian and I, as you'll meet him, he'll introduce himself. We met about 5 or 6 years ago, I believe, at Salt Lake City. And with that being said, reconnected recently, and he has some interesting opportunities that I want to be part of myself, as well as bring other people to the marketplace to show them too. So with that being said, this is Brian Mira. We met a while ago, and I'll let him speak for himself.
Well, actually, Ray, I'm sitting here thinking about it. That event that I know you're talking about was in 2017. So
Oh,
since we're about
17th.
to enter 25, that's almost 8 years ago, coming up on 8 years
Yes,
ago.
yes, you're
Yeah, it's
right.
been a while.
Okay.
Right? Yeah. But anyway, yeah, guys, my name is Brian Mara. Like Ray, my background has been in real estate and financial services for, 25, 30 years myself. And started really just as an agent, eventually became an investor in the real estate space. From there, ended up becoming a course creator, ended up creating the number one selling course, educational law, as far as how to flip short sales legally. And that was great, obviously, during the downturn when there were short sales everywhere. From there, I started opening up local real estate training academies in the Northeast. Had two in Philadelphia, two in New Jersey, and just running schools, train people and teach them how to maximize their real estate investings, right? And maximize their holdings, right? So you have your transactional flip the house, you have, like as Ray mentioned, recurring income models with, of course, would be with either rentals or actually the notes, right? Actually working with notes and becoming the bank, if you will. And a lot of that involved capital raising. So raising capital from people, showing people how they could make passive income through real estate investing. So maybe they had money in a self-directed retirement account, showing them how they could utilize that money to go ahead and invest in real estate, whether it was transactional, like a fix and flip, like you see on TV, or again, as Ray mentioned, with the building a rental or even a note portfolio. So fast forward, almost 4 years ago, 3.5 years ago to be exact, I moved here to northern Italy. So I'm sitting currently in Europe. We moved back to my wife's hometown, and I am at the very top of the boot of Italy, as they call it. So I'm on the border of Switzerland. And I partnered up with a private equity firm, a family office, about a year ago. And that's what we're here to talk about today, the opportunity of what we're doing with them and how we can bring this opportunity to Americans back in the States.
And when I first heard about this, um, for me, it was and I use the expression, it was a no-brainer. It makes sense. It's compelling. And the real nicety of it is a low entry point of funds. A lot of the type of programs like this always want $1 million, $2 million, $5 million. And we're talking about here's $100,000 to get started. But the returns on that 100,000 over a course of a year far exceed anything anybody can invest in for $100,000.
Yeah.
If you look at alternatives out there, what is it, startup companies? Um, I'm also in the food business, but it takes time. By the time you get your money back, it could be, 2 to 3 years, maybe 5 years, because you're putting it in there to let it rest and work, and then see the returns later. With this here, from understand, Brian, and you can be more detail. Um, it's I want to say it's almost immediate. Once you put the money in, you start getting feedback right away and get returns right away, and then it just compounds itself over time.
Yeah, I can give some of the details. So, the firm we partnered with is they're called Horizon Advisors, and as I mentioned, they've been around for 23 years. So there's a good track record here. Well, back in 2011, they started creating hedge funds for their clients. So, being a family office and managing their wealthy clients' financial affairs specifically, they started trading these funds by pulling them together. And so they started hiring and bringing in-house traders. Specifically, where their strong point is in the commodities market. And so they have a track record of 10 successful funds that they've launched out of Switzerland. They have a sub company by the name of WIP Finance. And so that's a little bit of history on the company and how that got started. Now, in July, August of 2023, they started the process of launching and exploring to launch a new hedge fund out of Luxembourg. I've come to find out that here, Ray, in Europe, a lot of funds, a lot of the bigger and dare I say better funds for credibility reasons are launched out of Luxembourg.
Mhm.
And it just seems to be where they're all coming out of today. So they went through that rigorous process and finally did launch the fund out of Luxembourg. And the name of it is called the Demetra Fund. And so it's a really simple concept in that clients are from anywhere around the world, they have offices in 7 countries around the world, are able to deploy their capital and immediately put it into one of these trading pools. So there's a few things I tell people. Yes, it pays a monthly return. It actually pays out every single month. So it provides cash flow. All right. The amount of the return, of course, is dependent upon the deposit size. So it's all broken up into tiers and asset classes by shares, if you will. So that's a custom situation depending on the deposit amount. Now, as you mentioned, the minimum would be 100,000 in euros because the fund is expressed in euros. Of course, it's traded in Swiss francs. That's how the fund starts. But for an American, which I assume most of this audience that are going to be watching this are Americans sitting back stateside, having your money in an alternate currency is, if not just for diversification, a great play. So a lot of people, as you know, Ray, they do very well back in the States. They have their businesses, their entities, their real estate holdings, their trusts set up and funded, et cetera. But if everything's in the US dollar, should a serious turn or correction happen, again, the diversification is what's nice here. So having your money in an alternate currency that's actually producing cash flow for you every month passively is what's so appealing about this, right? And so when it comes to that, you mentioned about, right away. So the way that this specific fund works, specifically, it's a 12-month mandate. So it's a 12-month contract. And most hedge funds have what's called a 2 and 20 model. A lot of your audience knows what that is. For those who don't, most hedge funds will take 2% of your deposit amount, and then 20% of the profits earned is how they get paid. So it's a 2 and 20 model. This particular fund, specifically with the Demetra Fund, doesn't do that. They simply take the first month's trading profits in-house. They keep them in-house, and the 11 months are yours. So they keep the first month, you're paid the second month, and thereafter for the next 11 months.
When you look at that, if I understand correctly, it's about 22% for the 11 months.
Exactly. It's a net effective return starting at the 100 grand. Specifically, we want to get into that. So from 100 grand to a million, it's effectively 2% a month. So if, again, 11 months you're paid, it's an annualized net return of 22% of your money.
And if you look at that from anything that could be invested in, especially and not to demean money by any means, but at 100,000 minimum, you're getting 22% return. I
Right.
can't think of any vehicle out there where you're going to do that. Now, I'm not being naive here because I know there's some things out there you can put 100,000 in, but you're turning it around in 35, 40, 60 days, and people are promising 35, 40% return. Those are far and few between, and it may take longer. That's the reality of it. And
You also have to ask yourself, what is the risk tolerance, right?
correct.
So for people who want to make, much larger returns, should I say, on an amount of money like that, this is a very conservative fund. It's structured legally by mandate to be a conservative investment vehicle. For example, they're only utilizing at any one given time 30% of the capital in their trading pools. So 70% of all funds, all client funds remain liquid at all times. So it's a very conservative approach.
It is because most people, when they do investing, they're asking for money. They're going to utilize the whole dollar amount.
The whole thing. Right.
Yeah.
Yep.
And then you're at risk. There's always a risk of putting money anywhere, but the challenge is how do you mitigate that risk for the person asking for it? And
Exactly.
I think that what you just said is that 30% will be traded and 70% will be in reserves, and
Yep.
everybody keeps on moving. And I think the other side here that we want to get point across is that you can add to this as you grow, as you feel comfortable. So today you start
Yes.
with 100,000, maybe you want to move up to 250 or 500. And then you just elongate the contract, if I understand correctly. And now
Well,
you're
they're 12-month mandates, so you can't just randomly add money to an existing contract because the legal structure of the funds in
okay.
Luxembourg, it's that window of time, if you will, for that amount. Now, as long as you're coming in with an additional 100,000 or more, as you mentioned, you would start a new mandate on top of that, and they could be stacked on top of each other.
Okay.
Alternatively, at the end of the 12 months, it does have an automatic renewal. If you don't want to renew it, it's just a 30-day disposition. Just give them a notice you want your, capital returned, and it is. Or at that point in time, if you want to kind of keep them on the same mandate, you can add funds at that time to the existing mandate.
Okay. Excellent.
So there's two different ways to go about it. Short answer is yes, you could add money anytime as long as it's the minimum of 100.
And then if you want to do more at the end of that contract period, you could
You
add
could
more
add
at
on
that
to
point
that
in time.
existing one.
Okay.
Correct. Yes.
And then up to $1 million or maybe $1 million plus is that 2%. And then when you get into the larger dollar amounts of, I'll say 5 million as an example, what's the
Mm-hmm.
return on that one on a monthly basis?
3%. 3%. So the next tier would be from 1 million to 5 million, and that tier is at 3% monthly.
Okay.
Okay. 5 to 10 million would be at 4%. And then
Okay.
it just goes up and up. So they do a lot of fund to fund business too, as well. So the current assets under management for the Demeter Fund is at 35 million, just for this new fund that they launched in July 1st.
Okay.
It's structured to be replicated and mirrored. So they're capped every time they get to 100 million. It's capped, mirrored, and a new one opens. So the idea is to have side by side structures, each one capping out at 100 million.
Okay. And we're bringing this to you um, because both of us have been involved in different vehicles for raising money or get returns on our money. And, for me, and I think Brian found this out too for himself, there's not too many products out there or opportunities out there for a minimum of $100,000 and get 22%
Right.
return. I have found them and I look all the time. And I think one of the things we both bring to the table is that we both have backgrounds and we know different people and we vet these out to make sure if I say I haven't found anything, then we haven't found anything. And
Yeah, we have a whole due diligence package, Ray, as well, including all the documentation. So, fully registered, bonded, licensed, and insured with the Swiss government. They're audited every 6 months, registered with FINMA, which could be a equivalent to FINRA back in the United
yeah,
States, the oversight body out of Switzerland. And again, it's we have all the documentation on all that. So
needless to say, this as we've been talking the last couple months on this product and also the opportunities in front of us. And you can see more of us in time, what we're doing, how we're what the success model looks like. especially here in the States, and then also looking at worldwide, what could we could do together as new people come on board, and then also what they can bring to the table for themselves by bringing the funds, the safety of it. Again, it's a risk because money is always a risk, no matter how you spend it, what you do with it. It's challenging. But I think together we can help each other build and move things forward.
Absolutely. Absolutely.
So what we'll do now is I appreciate everybody's time and listening to this. Uh, we'll be back.
All right. Looking forward to it. Thanks, Ray.
Thank you.